Welcome to the Stock Market Daily News Podcast. It's Tuesday, October 28th, and we're kicking off the day after another historic run in the markets. The S&P 500 reached another record high Monday, the Dow Jones cruised higher, and the Nasdaq wasn't far behind as optimism swept across global markets. Today, we'll unpack what's driving stocks to fresh highs, plus key company moves, and what you need to know about the investing landscape as we head into a packed week of central bank meetings and major earnings. Here's what we'll cover. Soaring U.S. stock valuations and whether experts say investors are playing with fire, Halliburton's hidden Q3 earnings signals fueling an energy rally, Shopify's red-hot share price and fresh warnings on valuation risk, explosive moves in Argentina after a surprise election, and the latest on Bitcoin's surge as the Federal Reserve hints at a pivotal shift. Let's get right to your market roundup. First up, major indexes post new records. What's really behind the surge? Wall Street came out strong this week, with the S&P 500 and global stocks touching intraday record highs Monday. Investors across the globe cheered on hopes for a U.S.-China trade breakthrough, and a slew of upcoming central bank meetings is keeping risk appetite alive. The S&P closed up nearly 1%, the Dow rose by almost 300 points, and the Nasdaq gained just under 1% too. But here's the catch. While markets rally, some investors remain cautious. According to new data, the so-called Buffett indicator, which compares total U.S. stock market value to GDP, just hit an eye-popping 217%, higher than even the dot-com bubble peak. Legendary investors like Warren Buffett once called levels above 200% a sign that investors are playing with fire. Also, the Shiller P ratio, another measure of market value, is at 39.8, its second highest in over 140 years. What does this mean? The market is priced for perfection, and while corporate earnings and economic data look strong, many experts warn that risk is rising for a significant correction ahead. So, if you're feeling FOMO, fear of missing out right now, you're not alone. But history reminds us, elevated valuations can eventually spark volatility and bring markets back down to earth. Key takeaway, enjoy the ride, but buckle up and know the risks at these all-time highs. Next, energy stocks are moving. Let's break down Halliburton's stealth rally. Halliburton, ticker HAL, quietly surged 25% over the last 5 days, far outpacing the S&P 500's 1.7% gain. What's happening beneath the surface? The oilfield services giant reported third-quarter sales just shy of $5.6 billion, which is actually down 2% year-over-year. Even more surprising, earnings dropped 21% to 58 cents a share. So why the big rally? Investors are keying in on Halliburton's serious cost discipline. Its ongoing initiative is saving the company about $100 million every single quarter. Plus, Halliburton's backlog of future contracts sits above $10 billion. That means steady work and strong revenue visibility, especially for international projects that lock in income for years. Another big shift, more than half of Halliburton's U.S. oil fracturing now uses its new Zeus electric fleet, lowering emissions and boosting efficiency. The market impact? Halliburton is showing it can pivot and stay resilient even when North American drilling slows down. Investors are rewarding this kind of operational flexibility and technology advantage, which are both critical as global energy markets adjust to new demand patterns and environmental pressures. For your portfolio, watch for energy and industrials that combine innovation with financial discipline. These may be best positioned when prices get choppy. Let's turn to tech. Is Shopify's stock about to snap after its huge run? Shopify, ticker SHP, raced up 21% in the last month to close Monday at roughly $173 a share. Such a sharp rally has traders buzzing, but a new report from Trafis waves a giant yellow flag. Shopify's valuation is now extremely stretched, and a drop to $120 a share wouldn't be out of the question. Here's why. Shopify's growth numbers are undeniably strong. Quarterly revenues climbed 31% to $2.7 billion. Margins are healthy, with cash flow margins above 18%. The balance sheet is rock solid, boasting $5.8 billion in cash and almost no debt. Yet, the stock's market cap has ballooned to more than $224 billion, making it, by several measures, one of the most expensive names on the market. Critically, Shopify has shown it can tumble hard when the going gets rough. During the 2022 inflation shock, Shopify shares tumbled almost 85% from their high, compared to a 25% drop for the S&P. So, while momentum is undeniably hot right now, history says caution may be warranted for those who don't want to get burned chasing tech rallies at any price. Story 4. Argentina's markets erupt after a shock election win for President Javier Milei. Argentina's legislative election saw Milei's Libertarian Party, La Libertad Avanza, sweep to a landslide victory in Buenos Aires province, a region long dominated by the Peronists. The party now holds 64 seats in the House, up from just 37, and this surprise political shift has markets surging. Early Monday, the global ex-MSCI Argentina ETF spiked 18% as investors bet on Milei's aggressive pro-market reforms and his strong alliance with President Trump in the U.S. With Argentina's monthly inflation dropping sharply, now at just 2.1% from 12.8% before Milei's term, and fresh U.S. aid on the table, both bonds and stocks are expected to rally further in the days ahead. Analysts say a devaluation of Argentina's peso is likely, with global investors eyeing more business-friendly policies and deregulation. The big lesson: political change can trigger massive opportunities, both risk and reward, for international investors who are tuned in to market-moving headlines. Our last headline: Bitcoin's wild ride as the Fed signals a major pivot. Bitcoin leapt nearly 10% this week, topping $116,000 before pulling back, a move that followed both a flash crash lower and bold predictions that the cryptocurrency could soar far higher. So what's driving the frenzy? Analysts point to signals from the Federal Reserve that its period of quantitative tightening, essentially draining cash from the financial system, is nearing an end. As central bankers hint at renewed money printing or even rate cuts, investors are seeking out so-called hard assets like Bitcoin, gold, and silver as a hedge against dollar debasement and inflation. Large ETFs have jumped in, with 3 consecutive months of Bitcoin buying by funds chasing performance. Some analysts predict that a full pivot by the Fed, combined with crypto's continued scarcity and rising risk appetite, could make this a key moment for digital assets. The broader takeaway: when liquidity returns to the system, risk-on trades, everything from crypto to growth stocks, tend to benefit. Keep your eye on Fed moves, because they drive both Wall Street and the fast-evolving digital asset landscape. Let's wrap up today's market action. The S&P 500, Dow Jones, and Nasdaq all closed higher, with the S&P hitting fresh records on the back of earnings strength and renewed risk appetite. Key themes to watch: skyrocketing valuations, a red-hot energy sector, tech names punching higher, but with growing caution around bubbly pricing. Globally, political shakeups and central bank signals are setting the tone for the next leg of market volatility. Looking ahead, all eyes turn to this week's Federal Reserve policy meeting, a packed calendar of corporate earnings, including big names in tech and healthcare, and fresh data on jobs and inflation. Be sure to subscribe for your daily market update, follow us on your favorite podcast platform, and visit our website for even deeper analysis. Thanks for tuning in to the Stock Market Daily News Podcast, your essential rundown of everything investors need to know every morning.